Got it. There you go.
Gentlemen, good afternoon and welcome to House Finance. Whoever would like to start first, please. Paul?
Mr. Chairman, Chairman DuPont, Chairman Mello, honorable members of the Finance Committee. I want to thank you for this opportunity to speak to you, to get some of the questions out of the way, whether we ever talk to the Treasurer. It's been asked of everybody that's come before you. The answer is no. We met with her maybe the week after she got elected, just as a meet and greet, and we've never been asked since that time to give our opinion on any of these pension changes that were going to come before you or have come before you now. So we can get that question right out of the way. We asked for a position, we asked for a spot on the pension commission board that she put together. We were never given one. We asked directly for a position. We were never given one. So we've never been part of the process. This is the first time we get to speak to you. Every decision that comes before you, you impact somebody's life. Every vote that you make, you impact somebody's life. From the smallest resolution that you pass on the floor, congratulating someone for something they did, might not mean a lot to many people, but it means a lot to that family that you made that resolution. And I say this because you do have an impact on people's lives. And this vote before you, or this piece of legislation before you, will be the biggest vote you ever take that will impact people's lives in the state of Rhode Island, both workers and taxpayers, and people that are currently retired. And as I sit, and I've come before these committees often, and one thing when you come before these finance committees, you always vet the situation before you, the bill before you. And I'm glad this is before this committee because this is so important, and I know you're going to vet this. People's lives will be changed here. You know that. I know you know that. I know every one of you wish you didn't have to make this vote or even have this before you. But you will impact people's lives throughout this state, the workers of the state, and present retirees with this vote. And I'm here to tell you that you're doing it on false numbers, and it's not your fault. That the numbers you've been given by the General Treasurer's Office are not factual. I tried to find a diplomatic way to say this because of the respect I have for this committee, but with people's lives being ruined the way they will be ruined by this legislation, there is no way to say this diplomatically, so I'll say it the way it's true. The General Treasurer cooked the books on this issue, and she's thrown it in your laps. And I make that statement today because I'm going to show you where she cooked the books on this issue. She created this problem. She created this pension problem on April 13th of this year. And now she's riding in on a white horse with this pension legislation before you to solve this problem. And why would she do that? We'll find that out in 3 years. But she's dropped this in your lap. She's made it perfectly clear that this is your doing. You have the vote. As I go to all her traveling salvation shows throughout the state of Rhode Island, I was in another one in Cranston last night. She's made it very clear that this legislature has to be courageous and do this. She's dropped it right in your lap. She wants you to destroy people's lives. Now, how did she change this? Why do I say she cooked the books? You've heard of assumption changes by all the actuaries you've heard from in the last month. Your head's probably spinning. The reason this was changed April 13th in a vote of 7-5 by the retirement board that she chairs, a very close vote, she changed 2 assumption rates, and that's what created this crisis. I'm not saying there's not a pension problem, but it's not a crisis. And all the facts and the numbers I'm going to give you now are in those handouts I gave you. The numbers that I'm going to give you come from state documents. No union documents, no union actuaries. They're state documents. They're documents from the Rhode Island Auditor General. They're documents from the Treasurer's Auditor, and they're documents from your staff briefings that you got. The first is the mortality rate. she raised the mortality rate from 65 to 87. Now, if you look at the Social Security mortality rate for the state of Rhode Island, specifically the state of Rhode Island, it's 78 years old. But when they changed that mortality rate by her actuary in that meeting, they used a 1994 annuity chart. Now, you all know what an annuity chart is. That's a chart that insurance companies use when you go to buy insurance or an annuity off them. And I think you all know that those charts, if they're insurance charts, they're inflated a little bit, so you pay more for the annuity. But that's what they used, a 1994 annuity chart. Why wouldn't you use the 2008, the last Social Security Rhode Island mortality rate from 2008? Because it didn't get them to the number they needed to be, the second highest mortality rate in the state of Rhode Island. Let's go to the rate of return. It was dropped down to 7.5%. Now, you've heard numbers thrown at you that the last 10 years, the rate of returns have been well below 7. I think the actuary used 5.5 yesterday. That's true. The last 10 years have been 5.5, a snapshot in time. You should know that prior to that, since 1984, the state of Rhode Island has gone at 9.1 on their rate of return. So they took a snapshot in time of the last 10 years, a time when our country was attacked. We've been in a 10-year war. We've been in a 7-year war, which thank God and thank the President, one is ending in a few months. But we've been through 2 wars. We've been through a banking crisis. We've been through a banking bailout, and that's the snapshot they chose to give you. What you haven't heard in this whole process, which I can't believe, is last year's rate of return in the state of Rhode Island was 19.1. That's 19.1. So I echo what the actuary said yesterday. There was absolutely no reason in these tough economic times in this state, when the state was facing a deficit and every city and town was facing a deficit, that on April 13th of this year, they had to change these 2 assumption rates that added $138 million that you had to come up with in the state budget last year, and added $100 million that the cities and towns had to come up with. There was no need to change it then. So you have to ask yourself why. I heard business people come up here yesterday and proclaim this pension to be great. I heard citizens come up here to proclaim this pension to be great, and the unions were the problem. Well, those people are wrong. They're mad at the wrong person. They should be mad at the general treasurer and the other 6 people, one of who was the director of administration for the governor, who voted to make these changes. They're the ones that added these pension problems. It's a problem. It's not a crisis. It's a problem that we can all work together on. You've heard every union come before you and give suggestions how to solve this problem. If we went back to the old, and I'll ask you to look at one handout that I gave you, and it's the handout that you got from your staff briefing the other day. And excuse me that I have notes written on it, but I didn't think I was going to use this until I saw it. It's the one that shows you the top graph that says pension funding ratio. Look at 2012. That's where the pensions were funded just prior to the vote on April 13th. Look where the pensions are. Look directly at the next graph after those assumptions were changed, how dramatically and drastically it dropped these funding, which led to the big crisis and the draconian changes that have to be made to people's pensions. Now look at the next graph with the proposed changes of this legislation where it brings the funding back up. It's less than 2% in each pension fund. We're right back where we were prior to the actuaries. Now, if we change those assumptions back, and I gave you proof where you could, if I didn't give you that proof, you could say, just a firefighter, I'm going to listen to him and not listen to the actuaries. But I gave you the proof why those shouldn't have been changed. So if you look at that last graph, if the actuaries' assumptions were brought back up to where they were, we would be exactly where we were prior. And you have unions coming in here talking about raising contributions. Reamortization is back on the table. You heard unions come to you and talk about doing something with their COLAs, adjusting their COLAs. If we work together and scrap this legislation that will destroy lives, if we work together and change those two assumptions, we can get to the table and we can get higher to where we are now. And we won't have to affect retirees that are already in retirement. This can be solved by working together. The numbers say that. This is your staff's numbers. This can be solved by working together. You change those assumptions. We all come to the table. Not one union has come to you and said, no, there's no problem. We're not going to do anything. Everybody has sat before you and said, we'll work with you. We can get out of this problem and lives will not be destroyed. And then we'll all be in an agreement. So it will take out of the mix the 10 years of litigation that you have before you. That's what Colorado is facing when they made these changes. They're looking at 10 years of litigation. So you take that out of the mix, the money you're going to spend on litigation, and we get out of this problem together. And I want to answer one question that was asked yesterday that no one had an answer about yet, but Ms. Raimondo had the question asked to her last night in Cranston. Who would control the companies that are coming in to Rhode Island that are going to be taking care of these 401ks? That's another thing I can't believe. We're going to give more money and more business to the people that caused this economic downturn in the state and across the country. Wall Street is going to get rich on our 401ks and bankers, but that's another issue. But her answer was she chairs a commission, an investment commission in Rhode Island, and it would be her decision what companies are brought in to manage our 401ks. Doesn't that smell a little bit to everybody sitting in this room that the person who is suggesting that the state of Rhode Island go to 401ks, she's going to be the one that hires the companies to come in and manage that? There's going to be some green going around this state, folks. And it's not going to be in the pockets of the workers. It's going to be back in the pockets of Wall Street and the bankers. And I hope that raises a red flag to you, that the very person who is suggesting that we go to a 401k now is the very person that will be hiring these companies to come in and oversee them. Thank you.
Thank you very much, Paul. Mr. Reed.
Thank you, Chairman Mello and Chairman DuPont and the members of your committee. My name is Paul C. Reed. I'm president of the Rhode Island State Association of Firefighters. I represent over 1,600 members and approximately 800 in the MERS system, and I thank you for the opportunity to speak before the committee today. My topics today will be starting with the disability aspect of this pension. Under the plan, we lose the disabled firefighter loses 15%, which is a significant amount of money. Now, as far as disability, there was legislation passed. Basically, that was worked on by both Representative Mello's committee and Representative DuPont's committee to put this problem away. It's worked so far. Now we're tampering with the product that was crafted by your particular committees and agreed to by the unions for the MERS system. The system to go on disability is extremely stringent in the MERS system. You have to have 3 doctors appointed by the state to determine if you are disabled. That is a significant threshold for overcome for anyone who isn't disabled. Losing the 50% benefit has an additional problem. As you heard from the correctional officers say, when a person who is on a disability pension takes a pension, that will be further reduced because the benefit will only be 50%. And the disability pension area will also be reduced, or as beneficiaries or widows, based on the accrual rate, where they have to, the state after a 5-year average has to make 7.5% or make the 80% threshold. Now, do they get that after 5 years How do they do that? Is there a 5-year delay on the COLA, even though they make the 80% of the 7.5? Firefighters do not put themselves on disability pensions. Disability pensions can only be awarded by the State Retirement Board. This is another example of cities and towns asking you to do their dirty work, all the heavy lifting. If they have problems with the system, they have the ability to come down here and speak before the Retirement Board. They want you to legislate a significant loss of income to these people. There's no differentiation here between someone who's totally disabled because they're paralyzed or some lesser extent. There's no in between. It's a significant 15% loss of income with a depleted COLA that may or may not get there until you reach both criteria, 80% or 7.5% increase, or 7.5 increase, or whatever the, excuse me, the investment fund yields. I also have problems with the age limit. You've heard from the state police, you've heard from, and I'm sure you'll hear from our police brethren here, that 55 is now the new age limit. Firefighting is an extremely active form of performing services to the citizens of our community. It's physically active. As we age, we become less able to do this particular job. To extend it to 55 makes no sense. What it will do, though, it will create a greater disability problem for these communities because firefighters will probably be injured more and be required to go out on a disability pension. That's one criteria. The second criteria would be that they would be injured more often. They may not go on disability pension, but there may be more of a need to fund their positions because they're not out. I'm very confused with this particular piece of legislation on retirement age. Some parts of the section has it at 45 and 52 after 5 years. I don't know if it's 55 or 67.5%. It's so confusing. If that was the intent of this legislation, they've really hit a home run on this. We don't know what it is, you know. They've changed, we had a 30-year pension in the police and fire pension. Now it's 20. We think it's a 2% accrual rate. And then they point in another part of the bill that now you have to work to get 75%, 37.5 years of service. Well, 37.5 years of service to get what we can get now at 30 will be another significant impact on people. What we're trying to do here is really, we're trying to say what Paul Valletta said. We want to negotiate this. There are problems in the system. We agree. Please allow us to negotiate it. We haven't been given the opportunity. Okay? Our job is different. It really is. Our job involves the safety of a community. And it's my belief that government on any level, it's their prime responsibility to ensure the safest possible environment for their people. Raising the age will not do that. It will create a system where we have older firefighters doing what younger firefighters are doing today, and it will not help the system. What we're asking for is just to negotiate this particular thing. We're not asking for special treatment. We're asking you to realize, based on the physicality of the job and the perils we face on a daily basis, we are somewhat different. Our perils are just not injuries and illnesses. We've been noticing a complete rise in post-traumatic stress disorders for what we have to see. Our number of responses are not going down, they're increasing. And we, similar to the state police who work as, I guess, troopers and non-detectives, work an average of a 42-hour work week. What we're asking again, and I've been very redundant, is let us negotiate things that are palatable to both sides and try to help the state to come to some type of conclusion on this problem in their pension system. Thank you.